President Donald Trump's new tariffs have sparked a massive stock market sell-off. In one day, the S&P 500 dropped 4.8%, the Dow dipped 3%, and the Nasdaq Composite sank 6%. Trump announced sweeping additional tariffs Wednesday, ranging from a 10% blanket tariff to 50% on all trading partners that will take effect as early as April 5th. Canada and Mexico were exempt from the additional measures, but existing tariffs will still apply. Trump argues that these reciprocal tariffs will stop other countries from ripping off the United States. The administration said they used this formula to determine the tariff rate necessary to balance bilateral trade deficits between the U.S. and each of its trading partners. So, the trade deficit divided by exports to the U.S. from that country divided by 2. If the country has a trade surplus with the U.S. or the calculated tariff was less than 10%, the 10% flat rate was applied. The formula has attracted criticism for ignoring nuance, and some of the poorest countries on the list are hit the hardest, with 50% on Lesotho, 48% on Laos, and 47% on Madagascar. The tariffs will remain until Trump determines that the threat posed by the trade deficit and underlying non-reciprocal treatment is satisfied, resolved, or mitigated.